Thank you guys for tuning in and putting your messages in and questions in by texting the word "show" to our telephone number here, and we'll have it right here on screen so you guys know where to ask your questions. But I want to read a couple of questions that have come in since our commercial break, and we'll get I'm here again with Patrick Comer. Patrick's our Chief Investment Strategist here at Financial Reboot. So anytime we have good, smart questions that I can't answer, which a lot of them I probably can't, we get Pat. So Pat, let's go right into it. This one is from Timothy. Timothy says, are bank stocks still a good buy? Now, we've been buying bank stocks here recently, so are they still a good buy?
We've been buying bank stocks for about a month and a half. We bought some forward options in January. We've talked about those in a few shows. Bank of America, Huntington Bank shares. Bank stocks are still a great buy. Depending on which, you have to pick and choose a little bit, but there's some very good banks at bottom still. In fact, a lot of the options that we're already up big percentages on right now, Samuel, they're still good buys. There's still a lot of room to grow.
So we talk about, one of the things we do here is we talk about when we buy stocks, sometimes we just buy the stock itself. Like for instance, if we're going to buy Bank of America, like we did in one of our case study portfolios, and for a lot of our clients, sometimes we want to buy just the stock, and sometimes we want to buy the option. So can you briefly tell everybody the difference between just buying a Bank of America stock versus buying the Bank of America option?
Well, generally we'll buy the stock, especially on a stock like Bank of America. It's a dividend-paying stock, and generally Bank of America is a slow grower. It's not like a Google or a Facebook where it's going to blow up 10 points in one day. So if we're looking to capitalize a little bit more long-term, we'll buy the stock. So that way we can capitalize on some dividend payments and just kind of accumulate that slow growth. Now, options, a little bit less investment, a little bit higher risk, but it'll give you bigger returns quicker. For example, like on Bank of America, if you'd bought the stocks when we had recommended buying the January options, you'd probably be up about 4 or 5%. But if you had bought the options like we did,
right,
now you're up big digits.
So it's kind of a way to increase the exponentiality. Those are smart guy words. Every time I sit near Patrick, I get smart guy words in my brain. I missed all these words on the SAT, just so you know. But it's really a way to leverage. So if you think the stock is going to go up, you could just buy the stock, or you could buy the options thinking it's really going to go up, and then the options are typically much cheaper.
The options are cheaper, but as I said, they're a little more risky because they have an expiration date on them. When you buy the stock, you can really go through the ebb and flows of the markets and not have to worry about them as with the options,
right? Because
once that expiration date comes.
So this is what we do for our clients when we suggest or we consult and we say, hey, this is what we're getting into. We're getting into the option of Bank of America or whatever, and we're going to be buying at this price with this strike. It's called a strike price.
Yes, sir.
So we find an actual strike price that Patrick and the investment team like. We find an expiration date that we like, that we think it's going to fulfill on.
Yes, sir.
And it's just, options are fun because
they're exciting.
That's when we've had like the multiple 3-digit return, like the multiple 100% returns, 400, 500, 600, almost 700% returns.
Yes, sir.
That we talk about in the show. So let's get right into it. Next question is from Kim. Kim says, is the economy really getting better?
This is probably one of the best questions we've had. Yes, the economy is getting better. Friday's job report showed that. The recent economic news has showed that. Now, it's not massive growth, but it's slow and steady, and it's what we need. We're coming out of that big funk from 2008. It takes time for these things to digest out of the economy. It's a massive economy, the United States of America. But we are getting to the point where the labor market is pretty much getting fulfilled. The Fed's just looking for a little inflation. That'll come. But we're getting steady GDP growth around that 1.5%, 2.5%. And that'll work for now, and it'll get even better as we go along.
Great. Now, Annabelle asks another question. She says, I noticed you don't have gold stocks right now. Is the gold rally really over?
We're not saying that the gold rally is really over. What we're saying is there's better areas you can capitalize gains on. Gold has been a very, very successful rally. We do have one gold play right now, and that's TGD, but that's a little bit more of an earnings play on a solid small company. But until gold takes out a certain resistance, which is around 1375, 1400, we don't see it right now as having enough opportunity that we would put money in gold rather than a financial sector or an energy sector.
Right. Let's see. Chris just messaged in, and he is saying, what's your favorite oil stock currently?
Our favorite oil stock right now is Laredo Petroleum. We were buying that in the low 9s, and right now it's up. It just broke out above $11. We actually mentioned that stock a few shows ago. But another one we really like that we've talked about several times is WPX. WPX is a company that is having a little internal problems on its balance sheet, but there is so much promise in this company, and it's a very, very popular stock. Now, if you do go online and you search WPX, be careful, because there are two WPXs that'll come up. One is WPX Potash Company. You don't want that one. It's WPX Energy.
Right. So that's,
yes, sir.
So that's the other thing too, right? That's a really good point. So as everyone out there is looking to buy stocks and maybe do a little bit of trading and take that nest egg that you got in your savings account or whatever, man, you guys got to be really careful that you're buying the right stock. So if we give you a stock pick and you want to follow it, please make sure that it's the right stock with the right price and all that stuff. I mean, this is what we do for our clients when we consult them. We make 1,000,000% sure that this is the stock that we are buying, that we're buying it at this price. If it's an option, we give them all the details on what that's for. So
yes.
Look, those are great. You guys ask really, really good questions, so thank you for that.
These are great questions.
Yeah, and look, the reason we do this show is we want to help as many people as we can,
yes,
because the stock market and making money in the stock market, it's kind of a rigged system, and if you don't know what you're doing, you're going to lose. Much like Vegas, you're going to lose. So this is why we built the team here at Financial Reboot that we did, because we know how the game works. And so once you know how the game works and you have a system for making money and making money regularly and consistently, then it's not a game. Then it's not a gamble. Then you have consistent path to growth and income, and then stuff gets really exciting, and that's what I love about it. So
you turn the word risk into the word investment.
So look, we're going to take a quick break. I think we got a special guest coming on, and that's going to ask some questions. Sometimes we like to pull out special guests from our community out there on Facebook land or YouTube that have questions. We like to pull them in and say hi. So let's take a quick break. We're going to refresh our drinks, and we will come right back in just a moment. We'll see you soon.